Hi 48 students. This week we're going to be entering week 5, which is super exciting. We're going to be working on section 3 of the business plan. So in the first couple sections, I'll be tackling the grading and giving you feedback. And from that, you can go ahead, make corrections, add additions, just improve it for the final business plan, okay? That'll be due coming up. But let's focus on week 5 first. So section 3 is basically all the financials for your business idea. This will include a balance sheet, income statement, and cash flow statement for 3 years. This whole page is going to be super useful and helpful for you. Let's start out with the rubric. So the cash flow statement needs to present a realistic assessment of cash requirements, both the inflows and outflows over a projected 3, not 5, but 3-year period. The cash flows are consistent with operating and marketing strategies outlined in the body of the plan, so what you've been presenting to me so far. And the cash flow information needs to be detailed for the first year and just annually for the second 2 years. Okay, the income statement. Again, realistic and attractive income potential of the business. If you find you're not going to be able to make a profit until maybe 10 years down the road, that's not really something that investors are going to look upon fondly, okay? So the income statement, again, needs to be consistent with the operating and marketing strategies outlined in the rest of the plan, and again, detailed for the first year, and after the first year, just annually or quarterly if that's what you prefer for the next 2 years. The balance sheet, again, needs to correspond with the other 2 statements and have a capital structure of the business projected and have long-term debt and equity positions well outlined. And this only needs to be annually for 3 years, okay? So with that, let's dive into our template you will be working with. Go ahead and add a sheet onto this template, type out startup costs, list them, give their prices, where you found the numbers. That will be super for both investors who are looking at your plan and determining whether they want to help fund you, or myself when I go to grade it or try to understand where you're getting numbers from. That will be super useful. And if I think your plan needs one to really, for me and investors to understand, I will doc you if you don't have it outlined. So just to be on the safe side, I would include one. So let's start off with our income statement. That's where I always like to begin because it's pretty straightforward. So basically what you've got looking at here is a template you'll all be receiving in Canvas. You'll have each month outlined for the first year, January through December. And then you'll have a year 2 and year 3 tacked on at the end. So basically, you're going to determine whether what revenues you'll be getting from service. So if you are a crop scouting business, what's the revenue you're receiving for each month for service? And then if your business is sales instead, like you're selling something to attach onto pivots, this is where you're going to put that in the sales revenue section, okay? Pretty straightforward. If you have a business that has both service and sales, go ahead and split up those 2 revenues and go ahead and put them here and here, respectively. And this template will actually has some calculations built into it. So your total revenue will be just entered in automatically once you fill these 2 out. Pretty cool. So again, 1 for each month of the first year, and then year 2, you can just summarize, clump together, and year 3, you can summarize. Now, cost of goods sold. This is if you were, let's say, making clothes, okay? So your beginning inventory for the month is what you're left over with here. So these 2 are the same, okay? So what you're left with in January, you bring over to February. The beginning inventory in February. Does that make sense? So your beginning inventory for the first month of the first year is always going to be, well, should be 0, unless if you know why it's not, okay? So goods purchased or created, that's, again, if we go back to our clothing business, let's say you're buying material and buttons and zippers. This is the goods purchased or created, okay? This is going to then lead into goods, total goods available, which is these two, both the beginning inventory and the good purchased or created added together is going to be total goods available. And then your inventory, again, is what you're left over with after you've created whatever you sold, okay? Whew. So the total cost of goods sold will be the total goods available, B12 minus B13, ending inventory. That's going to be your total cost of goods sold, okay? Gross profit or loss is equal to the revenue minus the cost of goods sold. Again, if you look through, if I'm not making much sense here, just look through the formulas that are already built into this template and you might be able to work it out yourself where some numbers go. So let's hop down to the expenses. My favorite part for nitpicking plans. Okay, so most of you should have an advertising expense. So go ahead and put a number in for here for each month. Depreciation, I'll go into that in a second. Fuel expenses, so if you're delivering things, if you're traveling to people's fields. Interest, this is interest on your loan, okay? We'll go into that in a second. License permits and fees, if you have license to operate, if you have a license for vehicles. Office supplies, insurance. Everyone should probably have insurance. So go ahead and talk to an insurance insurance agent about what kind of insurance you'll be needing, what that would run you each month or each year, just to get a really accurate representation of what number needs to be here. Go ahead and list the insurance agent and the agency you talk to get this number as well. I'll tell you where in a second. Rent, so if you are renting an office or land to grow crops or cattle. Salaries, so these would be this is not hourly wages, go ahead and separate that out. These are salaries, so if you have an owner's salary, this is where that will be. Technology equipment, trademark fees, utilities, and vehicle fees. There's also spaces to add on because each of your businesses are unique. So you will have expenses that I didn't foresee and that everyone doesn't need to have for this template, okay? If one of these doesn't apply to you, just go ahead and leave it blank. No big deal. So all these expenses are totaled here. If you probably won't, I can't foresee any of you selling an asset. For example, if you bought a combine in year 1 and you sold it in year 2, this would be the sale of an asset, okay? So I don't foresee any of you doing that, but if you think you do, go ahead and include that there. Net income before taxes, that's just this, your gross profit minus your total expenses equals your net income before taxes. Your income taxes are 30% of your net income before taxes, which is a formula already built into this template. And then your net income is equal to your net income before taxes minus your income taxes. Got it? Awesome. So once you fill out 1 month, go ahead and hop over to the next. Some of you have a more seasonal business, so this is going to be a little to your advantage right now if you haven't worked in seasonality, because you might not have to fill out much for January, February, March if you're not doing much in those months. However, although it's easier on the workload right now, you need to be thinking about what you can do during those months that can combat that seasonality, okay? So you're actually at kind of a disadvantage as well. Awesome. Okay, let's head over. Actually, I skipped over a couple points I want to mention. So interest, again, on your loans. Once you figure your startup costs, which is, again, in that extra sheet you tacked on to the end, startup costs, I'll actually just go ahead and include that down there for you so you can be sure and fill it out. But once you figure out your startup costs, you might have a better idea of what kind of a startup loan you'll need, okay? So once you kind of get that number figured out, go over this loan amortization schedule. Again, another tab in this template. You're going to type in your loan amount. So let's say you're going to use $10,000. And then your annual interest rate will be, let's say, 5%. Loan period in 5 years. Number of payments per year, we'll say 4. You have 12 if you want. Start date of loan. We'll just go with 10, 10, 18. Okay, no extra payments. So go ahead and type in the lender's name who you think you might utilize for this loan. And then this is your loan amortization schedule that pops out. Very handy, right? Okay, so that interest expense that I kind of skipped over in the income statement, which was right here, you're going to pull that number directly from your loan amortization schedule, okay? So you'll notice, oh, let's actually back up. We'll go with 12 payments per year just for this example because the first year in the income statement, we have each month outlined, so this will be a little easier there. So our first month, we have the interest expense of $41.67. So that's going to be the interest expense you put on your income statement. Got it? Awesome. Under expenses. So the next thing I skipped over was depreciation expense. So if you go out and buy a tractor for your startup, okay, you're going to go ahead and put that tractor as a fixed asset on your depreciation schedule. So the tractor here, describe it. So is it a Case IH? Give the number. Acquisition cost, what did it cost you when you bought it? The depreciation life you're actually going to find in this schedule right here, in Asset Life Table. It's going to send you right over to this link. It's a help and how-to center. You can search for things on here, or you can just scroll for things. There's a lot of agricultural assets here that you can go through. Again, if you have a building, it'll be on here how many years you need to depreciate it, okay? So head over to that for the depreciation life. And then this will just be the different, how much your asset is worth each year. So if it has a sale value at the end of its life, if it has a scrap value, you factor that in. You take the acquisition cost minus the scrap or sale value at the end, okay? And then you divide that number by the depreciation life number of years, okay? Then each year you will take the acquisition cost minus that number you just calculated. Again, the acquisition cost minus the scale or scrap value divided by the depreciation life number of years. You're going to take that number minus the acquisition cost, and that's what it's going to be worth at the end of year 1. Okay, let's work through just a quick example because that was a little confusing to even me. So let's say you bought something for $1,000. It has a life of 5 years, and it has a sale value of $100 at the end. Okay, we'll just tack that on over here just for reference. Awesome. Okay, so you take 1,000 minus 100. You have 900 divided by 5. 900 divided by 5 is, maybe if I do my formula right, 180. So you take 1,000 minus 180 for your first year, what that asset is worth in the first year, okay? Ignore all this. Okay, so that's what it's worth in year 1. But what you include over here in your income statement is the depreciation expense. So that will be the $180 that we calculated here. Makes sense? If not, go back, watch this again. If it still doesn't make sense, then come to me with questions or look it up on your own. I'm sure there's lots of resources out there that are a lot clearer than I am. Okay, so that basically covers our income statement. Again, just main things are revenue. A lot of you won't have cost of goods sold. That's okay. Just keep it down to expenses. That's perfectly fine with me. So your revenues, your expenses, net income, those are the big numbers on here. Okay, let's hover over the cash flow statement, my second favorite income, or I guess financial statement. So this cash received from customers is going to come directly from your income statement, as you see in this formula here, formula bar here. This is just going to be your total revenue, okay? That's what you receive from your customers in cash, basically. Pretty neat. Cash paid for operating expenses. Again, this is going to be coming from your income statement, just directly. It's going to be your total expenses minus your interest minus the depreciation? I think so. Yes, minus the interest minus the depreciation will be your total for operating expenses, because interest is here and depreciation is later. Okay, your income taxes, again, pulled directly from income statement as well as the interest expense right here. Investing activities. A lot of you won't have this necessarily, but some of you might. So if you sell any property or equipment in the first 3 years, you're going to include it here. And if you purchase any property equipment here, like big purchases, like a tractor, land, anything like that, that's where this goes. Again, net cash, just this minus this for this, already plugged in, don't have to worry about it. Okay, borrowings. If you get a loan here to help cover startup costs, or you borrow from a family member, that's where this goes, okay? Cash received from borrowings. Cash paid for long-term debt comes from your, again, loan amortization schedule. So that's the principal you pay each month. So for January, you're going to be paying $148.27 to pay off your long-term debt there. Okay, and then financing, again, that will just calculate itself. So cash increase or decrease during period is this plus this plus this. It'll factor in the negatives, of course. And then I'll give you either positive or negative number. Cash balance at the beginning of the period. Obviously, in the first month of the first year, it's not going to be anything. And then at the end of the period, it's just this plus this equals this. Cool. I hope you guys are watching my mouse, because that makes a lot more sense than watching me, because I'm not really describing things that well in some cases. So watch the mouse. Okay. So now we'll head over to our balance sheet. Now, the main problem I have with students is when they don't balance their balance sheet. I will talk to you about that here in a second. Just keep that in mind, though. Always balance your balance sheet. I will take off points if you don't. Okay, so cash at the beginning. Okay, let me just back up a second. Your balance sheet needs to be the same time each year. I would suggest putting it at the end of each year. So year one, it'll be December 31st of 2018, December 31st of 2019, December 31st of 2020, or whenever you start your business. Those are the years you're going to plug in. Okay? That's what I suggest. Just keep it consistent. So then your cash will come directly from your cash flow statement. It's going to be this number right here, cash balance at the end of the period. Well, no, sorry. It's going to be the December cash balance at the end of the period. Okay. Checking account balance. If you have a checking account balance, a lot of students don't fill this in because it's a lot of extra work to kind of keep that separate. Probably don't have anything here. Any investments, again, not really an issue. Inventory, supplies, any of those. Accounts receivable, if there are any customers who haven't paid in full by the end of the period or by the end of the year here. Prepaid expenses, if you have, I guess, trash collection that's paid for the next 3 months, include that there. Other, again, define that how you want. There's a lot of great resources online that outline all these financial statements, give you examples that would pertain really closely probably to your ideas. So it'd be helpful to look them up and see what expenses and things they thought through in developing these as well, once you give a go at it, you know. So total, again, all these current assets added together is here. Fixed assets, property, if you have land, equipment. Oh, property is different than equipment. Other investments, and less accumulated depreciation on assets. So that, again, is going to come from your depreciation schedule right here. So total assets are this plus this plus this equals this. Awesome. Okay, current liabilities. Oops. Okay, accounts payable, things you need to pay for that you haven't yet. Accrued wages. Those are, if you haven't paid your employees for all the work they've done by the end of the year, that's where this goes. Again, all this is pretty technical. If you just make sure, well, if you keep it in your head that all your customers are going to be paid, or all your customers are going to have paid, and you're going to pay all of your bills and all your wages by the end of the year, it makes it a lot simpler. You don't need to have all these accrued different expenses, liabilities, assets, that kind of thing. Okay, interest on loans. If you haven't paid your interest on your loans to the full by the end of the year, that's where you put this. Principal payable on current loans. Again, if you consider you already paid them, don't have to put that down. And then current principal due on long-term loans. If you haven't paid it by the 31st, that's where that goes. Okay, non-current portion on long-term loans. That's what you haven't paid yet. This should be filled in if you have a startup cost. So that's where you find that is on your loan amortization schedule. And it's, let's say, okay, we're at the end of the month, end of the first year. Let's say that's right here. Your beginning balance on the loan is here, but this is what you want to put in that slot we just talked about, the $9,705.30. That goes right here, the non-current portion on long-term loans. That's what you have yet to pay off. Okay, total liabilities are current plus long-term liabilities. And then owner equity. If you yourself are investing your own money in the startup of the business, that's where you put the investment capital. Okay, so let's say I'm bringing in $20,000 to start my business. I'm going to put that in year 1, if that's when you're going to include it. Don't drag it over to the year 2 and 3 unless if you're going to pay in $20,000 every year. Okay, so now the exciting part. Where to balance your balance sheet. That's going to come right here in the accumulated retained earnings. So this number, you're going to plug in this formula. Total assets minus total liabilities minus investment capital. That's going to make your balance sheet balance. Yay! See, total assets needs to equal total liabilities plus equity, and that's where the number comes in. Accumulated retained earnings. So with that, we've made it through all 3 financial statements. This is pretty rushed, but I think hopefully you've got at least a good start on it. Let's head back over to Canvas and see what we need to look at next. I've included an example of an Excel document already filled out for you guys to look through, and there's also a notes page, which I haven't mentioned yet, but also an example notes page to go along with that Excel sheet to explain the process behind the numbers that were put down. That should help you a lot if you go through there. I'll let you do that on your own, because otherwise this video is going to be way too long and you're not going to be paying attention by the end of it anyways. So go ahead and do that on your own. If you have questions, please shoot them at me. Okay. But the notes page, let's go ahead and open that up because I want to show you just exactly what else you need to include. Section 3 is due on September 28th, okay? So you have a little bit longer to work on it. It's due not this Friday, but next Friday, okay? I will go ahead and set up a meeting with you guys, one-on-one or in small groups if you'd rather, to really talk through your business plan and the financials that go along with it. If you need a little help just really figuring out where to put everything, if you don't think you have all your expenses that you should and you need help brainstorming some more, go ahead and shoot me an email too. But first, let's go over the notes page. It's also due along with your Excel templates or your filled out Excel templates. Okay. The notes page is going to be included in the appendix section of your final business plan. But it's also due on the 28th with, again, the Excel document. So what you're going to do is you're going to list out each statement, income statement, your cash flow, and your balance sheet. You're going to reference specific cells in each. So again, this refers to cell P6. and you're going to explain why you put the number down that you did. So B6 refers to sales revenue based on 12,000 pounds of basil and $9 per pound. I'm looking for very specific numbers here. If you have reference or receipts or references of where you got these numbers, put them in there as well. I really look at this notes page to help me grade it and really understand what your brain was thinking when you put them down, so I can help you correct it if it needs corrected, or just this helps the investor again as well also understand what you're thinking. So again, the Excel page and the notes page are both due for section 3. Here's a couple helpful links to the asset life table. Again, the thing we listed earlier, I showed you earlier, and another amortization schedule. You don't really need to see that one. Don't really need to use that one if you use the one already embedded in the template in the Excel document. Okay, so that's about all for today. Sounds like a lot. It is going to be some hard work. If you have a great friend or family member who's very good in accounting and you want their help, please utilize it. If they're willing to help you, that would be great. I'll also be utilizing some outside help to help me look through all these and make sure that they make sense, that you're including everything. I want to get as many eyes on these statements as possible, because that'll help us really make sure the financials are sound. Because if you aren't making money, your business isn't really going to be viable. So we want to make sure that all the unforeseen expenses, at least at this point, are accounted for. Which sounds like a really, really tall task, but tall order, but we'll get there. So again, if you have any questions, please let me know. I'd love to have a meeting with you guys. Just shoot me an email, a text, we'll set something up. So with that, good luck and have a good night.